Hello, everybody. Welcome to another episode of Simply Bitcoin IRL. Today, we have a very special show lined up. We have Dr. Jeff Ross and Joe Carlasare. I think I nailed the last name. Anyways, before we jump into the show, I want to give a quick shout out to the Bitcoin companies that make this show possible. Of course, best place to build your Bitcoin stack, swan.com. It's being built by Bitcoiners for Bitcoiners. Also, check out their new product, swan.com/IRA. If you have any questions about that, you could always send me a message on Twitter. And of course, the largest Bitcoin conference on the face of the earth, Bitcoin 2023. It's coming up in less than a month, Miami Beach, Florida, May 18th through the 20th, 2023. And you could use the promo code SIMPLY to get a 10% discount on your tickets. All right, no more delay. Joe, on a scale of 1 through 10, how badly did I butcher your last name? I think you're muted, Joe.
Sorry, I just said you nailed it. You absolutely crushed it.
Yes. Awesome. Awesome. Okay, great. All right, well, it kind of makes my job easy because of all the madness that's been going on. And you guys are, what I consider some of the macro heavyweights on Twitter. I just want to read a statement by the Treasury, and then I want to get your takes, your guys' takes on this. So Treasury said this yesterday, and this was before PacWest Bancorp stock just plummeted like a shitcoin. They said the banking system remains sound and resilient, and Americans should feel confident in the safety of their deposits and the ability of the banking system to fulfill its essential function of providing credit to businesses and families. I don't know about you guys, but I don't know. I don't know how much I believe that.
You got to believe, Nico. The number one job, right, of the Fed officials and our governing officials is to manage expectations. It's not the dual mandate. It's not all this other stuff they talk about. They're literally like their main job is to manage expectations. They know what a circus it is. They know what's going on behind the scenes. They're on the phone with these people all the time. They're having emergency meetings, I promise you, on a regular basis right now. But their job, they cannot show panic, right? I mean, if they say anything that would instill any sort of panic, there would be just even more massive bank runs than there already are. So I think that they're trying to stop it. I think we're going to see more of these regional banks go down before this is over. I'm not just massively bearish. I think at some point, I mean, it's hard. It's hard to talk about this because I don't personally want to incite any sort of bank run. I don't think there needs to be one, but this is the kind of thing that happens when people start to lose confidence. People get really, really worried about their money, and if they think that it's unsafe, even if it's not necessary to do, to flee, to go somewhere else, to take their money somewhere else, people panic and they do crazy things when they're scared. And so I think that's what we're seeing. And the Fed officials, the other central bank officials, are doing everything they can to prevent this from happening. I'm not sure they'll be successful, but I'd love to hear Joe's take.
No, I think that's great, and I agree. So let's, if I can, if you'll indulge me, let's go back to the beginning. Okay, why this is occurring, right? So obviously, it's well known, I think, that the Federal Reserve has been on this rapid, accelerating rate hiking campaign, right? And that has diminished the book value of many assets, bonds, MBS that is held at all these regional banks. Okay, so how are the regional banks different from the more global, systemically important bank? And the reason is very simple. It's that they're just not as robust. They don't have the cash flow. They don't have the balance sheet capacity. They're weaker players, right, in the system. And in an economic downturn, in a situation where there is a rush to get your deposits, okay, you are going to naturally, if you're an entrepreneur, if you're a business owner, you're not going to just risk uninsured deposits sitting at these regional banks where they're jeopardized. So what you've tended to see is that the weaker players, particularly a place like Silicon Valley Bank, the ones that had a lot of uninsured deposits, a lot of people that had transactional accounts, meaning they weren't investing those assets, they're just holding them in deposits on behalf of businesses who had cash flow concerns. They got nervous, right? Because they know that their book value of all these assets, mark to market, are substantially lower because of the Fed's rate hikes. So if you're in that situation where people like Peter Thiel and all the companies he's investing in, you're going to say, I'm not going to risk my deposits at this bank. I'm going to err on the side of caution. I mean, it's kind of a primordial urge to protect your capital if you have them at a bank that is even so slightly exposed. So you've seen it start at the edges, and it will work its way towards the core, to the bigger, more robust banks. And that's what you're seeing. One by one, they sort of get, the weaker players are purged from the system. I think it's important, if you're analyzing this, is to realize, unlike the 2008 crisis, this is not starting out as a credit problem per se. It's not people that are defaulting on loans and they're delinquent in their obligations. It's starting as a problem with these banks that have all of this stuff that they thought that it was going to be a very low interest rate environment for a long time, and they could load up on these extremely low yielding instruments that are now worth a whole lot less. And then as things have progressed longer, as they've gotten tighter with respect to liquidity and credit, it puts more and more stress on them. So, we can get into a whole path forward here where we think this is going to go, but the ultimate problem starts off from the standpoint is that these smaller banks just don't have balance sheet capacity compared to the bigger ones.
Yeah. And then what is the unintended consequence of that, right? Over a long period of time is you've seen the smaller banks consolidate into the bigger and bigger banks. And I actually have a chart. I'm really glad that you brought that up, Joe. I'm actually going to pull it up, right? For audio listeners, right? It's like a chart that starts from 1995 and fast forwards all the way to 2009. So this problem has gotten even worse, right? Where, the smaller banks consolidate into the bigger banks, and it goes from Wachovia for First Union that consolidate into Wells Fargo, right? Bank of America. You have all these banks, Merrill Lynch is in there as well. Bear Stearns consolidated to JP Morgan's Chase, now First Republic. And what are the unintended consequences of this on a long time scale? And on the federal officials, they don't really care about it. There was a viral video of a senator from Oklahoma confronting Janet Yellen about this, the U.S. Treasury Secretary. Like, hey, what? Don't you worry about this? And she kind of gaslit him a little bit. I don't know if you guys know what I'm talking about, that specific video. But what are your thoughts on that? What are the unintended consequences of just a handful of banks controlling everything, basically?
So I'll jump in first on this one. So I think number one, it's bad for America. I think you have to look at why we have regional banks, why we have local banks, why we have credit unions in the first place. And it's because they have people on the ground in these communities that have the ability to use what I call soft factors in assessing credit risk. Okay. Meaning that they know some of these farms they're lending to. They know some of these local businesses on a first name basis. And they know that if I give it to Joe Smith, he's going to repay this loan and he's using it for the local pizzeria. So it provides that liquidity and provides that credit for entrepreneurial spirit. And it doesn't, those entities don't get lost in the bureaucracy of the mega banks, right? Which have much tighter requirements. They don't have as much leeway. They don't have as much discretion. And that's really why, if you start at its core, why do all of these, institutions, companies, why do they put their money into regional banks? Why doesn't everybody just bank at JP Morgan, right? And the answer is because they prioritize that relationship. That relationship with a local banker is important. And they're saying, we're going to even risk having uninsured deposits at places like Silicon Valley Bank because of the unique access that bank provides to that investment community and to the resources that come there with it. So I think the answer to your question, the unintended consequences are this consolidation of the banks, as you showed in the chart, but also you're starving credit from people that would otherwise have access to credit if there was a regional banking apparatus. And that's a terrible thing for the country and for the economy.
Yeah. So what would you say to that, Dr. Ross?
I'll just jump in to say I'm not convinced it is unintended, these consequences. I think that the government and the regulators love to see consolidation. I think they want their tentacles in everything, right? They want to see what's going on. And it's way easier to see what's going on at 4 huge banks than it is to see at 4,000 regional banks on top of that. So I think they would love nothing more than to see all of that get consolidated under the big 4. And I totally agree with Joe. I think this is really difficult on smaller local communities. It's really difficult on small businesses. I'm a small business owner. I deal with this all the time. I deal with regulators a lot. I'm fairly convinced they are not on my side, right? Me and my attorneys spend lots of time trying to comply with regulators. And from my standpoint, I'm like, I feel like you're trying to put me out of business with all of these regulators. I can barely survive. I'm not getting a paycheck several months a year because all of it goes to my attorney fees. And Joe obviously is a good friend of mine and is an attorney, and so I'm not coming down on attorneys. Like attorneys are my best friends during these times because the regulators are making it so difficult. So I'm of the sort of conspiratorial type opinion that they would love nothing more than to see lots of consolidation in small businesses, and especially in regional banks. They would love to see them turn into, morph into the big four larger banks.
I don't, you know what, Dr. Ross? No, go ahead, Joe. Go ahead.
I was just going to say, if you want to go down the conspiratorial route, one thing to think about is that during the '08 crisis, right, you had similar issues with the smaller players, that they were fearful of potentially liquidity issues, and they ramped up alternative programs. One was called, I was actually just looking at this today, the Transactional Account Guarantee Program, the TAG program. And that's where the FDIC provided unlimited insurance coverage for non-interest-bearing transaction accounts. It's interesting, given the particular issues facing the banking system right now, how they have not resurrected that program yet. So along the conspiratorial lines, maybe it's not the worst thing that they want to purge some of these players from the system. Particularly, I mean, it's well documented with respect to Signature Bank, according to Barney Frank, former chair of the House Financial Services Committee, that there was a message sent to bring that bank down to send a larger message to crypto in general. So, there are targeted efforts, I think, that are underway, whether it's explicit or not, to purge the system of certain players.
And I would also say that, Dr. Ross, I don't think it's a conspiracy. I think that's a convenient label, right? I had the privilege to have Caitlin Long, and I asked her point blank, right? Why did they deny, Custodia the federal banking charter, which would make her competitive with these other banks, even though Custodia was 108% backed, right? And she said that the orders came directly from the top, meaning the White House, right? And then this kind of fits into the writings of Nick Carter with Operation Choke Point 2.0, with this massive move by the administration in the hopes of isolating the traditional financial system from Bitcoin, right? And it is very, very convenient for them if there's only a handful of banks of which they have to control, basically. And then there is another thing that you're mentioning, Dr. Ross, and I'm curious to get Joe's takes on this since he's a lawyer, is this idea of this regulatory moat, right? And I think the big banks see it as a cost of doing business, but if you're a small bank and you're trying to compete, it's almost impossible because you're spending more on just compliance than actually trying to provide a good user experience for your customer.
Yeah, I don't have much to add on that other than the fact that that's a real thing. I mean, that's one of the reasons why we haven't had more, I think, Bitcoin-only exchanges in the United States, because it's extraordinarily difficult to set up the proper accounts, the proper registrations, to get the licensure. I mean, it's so cost prohibitive. And for banks, they're one of the most highly regulated industries. They're up there with insurance in that, the amount of hoops you have to jump through in approval to get anything done. Even something simple. We were helping a client who was providing Bitcoin services and offering custody services. They wanted to just they wanted to get the green light to withdraw Bitcoin, right? Just let customers withdraw their own Bitcoin so we don't have to custody on their behalf and they can go in and out. It was extraordinarily expensive. I'm not going to give you the exact number because it would shock you, but it was so expensive that it would say, this is just not worth it economically. We're just not going to go down this product line.
Yeah. So, and this is actually a question that I've asked Dr. Ross, but I think that as human beings, we, just the way our relationship with time, we think that things are going to happen a lot faster than we anticipate, right? The reality is that this recession hasn't happened, or maybe in the mainstream eyes, is that going to happen? I've read a lot that it's now like unavoidable. It's going to happen later on this year. Why do you think it's taken so long? I think people were expecting it in the beginning of this year or late last year. Why do you think the recession hasn't happened?
Take it, Joe. Well, let me start out by giving Joe kudos, because when I was, screaming from the rooftops in the fall of 2022 that the recession was basically here, Joe's like, no, no, no. The economy is still strong. Unemployment is still low. I still think it's stronger than you're saying it is to me, which was good. Kind of calling me out on that a little bit, and it's probably still not going to be here for a little while. And so kudos to Joe for being right on that. I look more at how do risk assets perform regardless of whether or not we're in a recession. But I will say, so that's why I don't really like making recession calls personally. I don't really care. And that's not to say I don't care about the cost and the human suffering that goes on. I care deeply about that. But for my clients, and as far as, making money, preserving purchasing power, things like that, I care more, what is Bitcoin going to do? What are risk assets going to do in general? What are stocks, bonds, those kind of things going to do? I would say that the way the economy is setting up right now, to me, still looks extremely worrisome. The fact that the yield curve, you look at the 3 month 10-year yield curve, and it's inverted, man, 178 basis points, I believe, somewhere around there right now. I mean, it's just ridiculous how inverted it is. Now, that doesn't mean that means the recession is going to be extremely terrible. They're not correlated necessarily. But when you look at that and you see what's going on with the banking structure, and you see what's going on with the Fed continuing to tighten into this economic slowdown. So even though we're not having negative GDP growth, we still continue to see slowing GDP growth. All of these things going in tandem with each other just portend to, I think, a really negative outcome at some point. I think at some point we still get a floor dropout moment. I think tomorrow we're recording this, Tuesday, May 2nd. Tomorrow, Jerome Powell speaks. I think if he comes out with guns blazing again and is extremely hawkish, I think they're going to raise 25 bips. But if he comes out and says, "Hey, we're going to continue raising. We still think inflation is too hot. We still think the economy is very strong. So buckle up for more hawkishness." I think the risk assets that market in general has is going to be very tumultuous, and I think that there's a chance the floor does drop out sooner than later. And then when you layer on top of this, and then I'm sorry, I'll stop talking. I want to hear what Joe has to say. When you layer on top of this the debt ceiling debacle that's coming to a head, especially based on what Yellen was saying, that the Treasury may run out of money by June 1st. This is all going to come to a head basically this month. So I'm very curious to see how things respond. I'm very bearish in the near term for risk assets, for even Bitcoin. I think Bitcoin price gets sucked down probably. It's hard for me to be optimistic at this point. And whenever, regardless of when the recession officially hits, I think that things like stocks and Bitcoin are going to struggle for the remainder of this year, unless the floor drops out and we get a bottom in the near term. So not sure if that made sense. I don't know when it's going to happen, but we are getting closer and closer to that moment. And I don't think we're going to have just kind of a soft landing where all of this just gets smoothed out and we head to higher levels. I know some prominent people that think that. I'll just throw out Raoul Paul as one guy who thinks that, we're probably going to have a little bit more tumultuousness for the next month or so, and then it's just free sailing from there, and we're going to go on to higher highs. And I'm definitely not in that camp.
Yeah, and what's your take on that, Joe? What's going on here? I think a lot of people were anticipating it earlier. Are you on the? I of course, as a Bitcoiner, I'm like, this is definitely not going to be a soft landing. Why? Was it just the strength of the U.S. economy?
Yeah.
What's your take on that?
So let's go back to, again, 2022 and what I think happened. I think this goes back to, the hardcore Bitcoin spirit here, right? Because we don't have a good money in society, I think our psyche is just conditioned that when asset prices are declining, when the stock market's down 15, 20%, people just associate that with a recession. And that messed up a lot of people last year, because you saw asset prices performing very poorly coming out of 2021, which was a fantastic year. And the year before that, after COVID, was another fantastic year in 2020. But what really happened, I think, is that you had, the peak liquidity, you had the peak low rate environment, you had the peak optimism over reopening over COVID. All those things started to peak out in middle to the end of 2021. You saw this sort of rolling through the asset classes. And then you said the Fed, which was slow to react to the CPI prices, they were just starting to press their metal to the their foot on the gas to get as fast as they can to sort of catch up with the inflationary impulse, right? So this confused a lot of people. When if you looked at the actual coincident economic indicators, the leading indicators, they were still fairly robust through most of the year. And that's what I was looking at for terms of the real economy. But as Jeff pointed out, like nobody really cares about. I tweeted this out. Like, I think most people wouldn't actually care what happens to the real economy unless they either lose their job or their assets are declining, right? Otherwise, they just, the economy, which has been running under trend growth for the last 20 years, basically since 2000, they just say, whatever, it's fine. As long as assets keep going up, I'll get richer and richer on paper. Putting all that aside, what happened? Where are we at right now? Well, we already had sort of the liquidity tightening cycle. Okay, that's the key part. Liquidity is tightening. We've drawn for the system. Rates are getting higher. You can see this across all asset classes. You had these little bumps, right? Because nothing goes in a straight line down. Even a ball rolling down the hill tends to bounce, right? So you had these bounces of liquidity, most notably in the last quarter of 2022. But realistically, the actual economy has not yet slowed. So I think we're moving into the second phase where liquidity is being withdrawn. And then now you figure out who's swimming and who's swimming naked, right? This is the credit crunch. This is the credit contraction part of the economic cycle. And my base case is at a minimum, not necessarily a collapse, not necessarily a 2008 style recession, but a serious recession, a recession that will be meaningful in terms of the rise in unemployment. I think that comes this year. And again, these are sort of long, slow processes, okay? I don't expect this to be over with this year. I don't expect it to be over with next year. I think there's a great possibility we could be having the same conversation a year from now, talking about the recession and when it's going to be over and when are assets going to start to go higher. I don't think it's going to be a quick, easy one. We're sort of accustomed to these sort of V recoveries. I don't think it's going to be this one. I think it's going to be a grinding, slow-moving environment. And from my standpoint, I go back to the academic literature and the research, right? The research shows that when you hike interest rates, it's anywhere from a 12 to 24-month lag before those rates actually percolate through the economy. And the majority of debt from high yield needs to be rolled in late 2023, 2024, right? So these companies are going to be rolling their debts at very high interest rates relative to what they took out the loans at, which is going to put all sorts of strain on the financial system. So I think we're like in the early innings of this, and it's going to go for a long time. And the only thing I think that would be reverse this trend is if you have something serious, systemic that breaks, that forces a reacceleration of the liquidity, the ZERP, the stimmy checks, that type of thing. But honestly, I don't see that coming anywhere near in the future. So I think we're in the early innings of a recession. I think it comes starting probably the later part of this year. All the early leading indicators show the economic growth falling off month over month. Even unemployment is starting to soften ever so modestly. But again, don't get confused. Last year was not the recession. It was the economic data was robust throughout the entire year. You had 4 consecutive quarters where GDI was positive. You had 2 quarters where GDP was positive. Nominal growth was high the entire year. So you really just didn't have you had record low unemployment for most of the year. You didn't have what we typically see in a recession. It doesn't mean it's not coming. It's just going to take a lot longer than people think.
Yeah, and then also what's being talked about as well, like what I've been reading up on is this idea of stagflation as well, right? Where you have this persistent high inflation and then, potentially heading into a recession, like you said, Joe. As a country, I don't think we've experienced that since the 70s, right? And in the 70s, we had about a decade of just static economic growth. What are your thoughts on that? Is that a possibility?
I don't see that. I actually think we're heading into recession because I think that the Fed is very much resolute in their efforts to stamp out inflation. And again, they have sort of now admitted it publicly that they're forecasting a recession, right? Which many people in macro circles have known for a while, right? They're coming to the terms with finally accepting it. But if you looked at their own summary of economic projections, they think unemployment is going to get to levels where you would only see those types of levels in a recession. Right, so it's well within their forecast, and I think it's their stated or unstated goal to trigger a recession because they know there's no way they're going to get the CPI down to 2%, which is their target, unless they trigger a recession. Now, can they revise their target? Can 2 become the lower end of their expectations and they revise it higher to 3 and just accept it and call it a day? I think that's a higher possibility than most people think. But right now, you're seeing 80% of the basket still run 2 points above where it should be. That's nowhere near where they need it to be. So I don't see them pulling their foot off the gas. And every other cycle you've talked about where they've come in and they've sort of been able to massage it through interest rate cuts or maybe stimulus checks. Okay, you didn't have the type of CPI numbers we're still seeing right now, the persistently high CPI and the easy downturn in CPI, the easy pullback. We've gotten rid of that. We've exhausted it. The last 2% are going to be the hardest, the stickiest components. And to do that, they're going to have to trigger what is more than a garden variety recession. It's going to be a painful one, I think. And what do risk assets do in that environment? That's a whole nother discussion, right? Because that's a whole separate inquiry we can get into. But I think in terms of unemployment, I expect unemployment to be going up substantially over the next 12 to 24 months.
Wow. Okay. And actually, I want to get back to how risk assets are going to perform, specifically Bitcoin, because this is why everyone's here. But before we get to that, I want to pass it on to Dr. Jeff Ross. His same question about stagflation. Do you think that the Fed is hell bent on, doing whatever it takes, even if it means putting millions of people out of a job, to get inflation under control?
So yes, I'll say just flat out for that. But I'd like to add, I think that's a terrible way to address this situation, right? I think it's barbaric to try to bring inflation down by destroying demand. Because when we say destroying demand, what we mean is they want to put Americans out of work, so Americans don't have the excess spending capacity to drive prices higher, and that lack of excess spending capacity will cause prices to fall. Totally barbaric. There are other ways to go about this. On a supply demand curve, there are two curves, and one of them is demand and one of them is supply. I think we should be focusing on supply personally and not worrying about inflation so much personally. That's my opinion, and obviously the Fed disagrees with me. I do think when we look back in history that we will consider the 2020s to be in general a stagflationary period. I think, but like the 70s, we consider the 70s to be stagflationary, but there were lots of smaller, shorter periods within the 70s that you did not see stagflation, right? You have periods of, and I think we're going to see this decade, periods where we see deflation flat out. We see deflationary busts. I think we're at a high risk for that happening over the next year at some point, where the floor drops out under prices, under commodities, under stocks, even possibly under Bitcoin again. And inflation, I don't think is just going to go away. The one other point I want to bring up, I've been thinking a lot about this, and I really kind of hope I'm wrong, sort of. I'm not convinced the Fed is going to come out immediately with a bazooka this time around, because I think they know, and Powell has brought this up. He does not want to be Arthur Burns of the 70s. He does not want to say, okay, we finally defeated inflation. Yes, the market's tanking, everything looks terrible. And what they did in the 70s is then they quit trying so hard to destroy demand, right? And so they came in with easing, basically their version of it. They pulled rates way down, and what happened is inflation just spiked again. I think the 2020s, even though it's different than the 70s in many ways, I think the 2020s is going to be marked by very tumultuous and volatile inflation in general. And so I think Powell will be loath to open the bazookas up and just be like, okay, QE infinity. I hear a lot of people saying this, and I even was saying this 6 months ago, but I'm not so convinced that that's actually going to happen. I think he doesn't want to do massive QE because they run the risk of sort of reigniting inflation again, and then just being right back in the same problem that they were, 2 years earlier. So I'm very curious to see how he responds to this, and I'm not overly optimistic about it, to be honest. So that's a long answer to say I'm pessimistic, and I'm also kind of increasingly pessimistic about the solution. Lots of people are really excited for the Fed to turn and to use all of his weapons and get QE infinity just going again. I'm not convinced that's going to happen as soon or as massively as many people think.
Okay. All right, gentlemen. So moving on to why I feel like a lot of people tune into this type of show, which is in this, in the next 6 to 9 months, right? Whatever happens recessionary wise, what's going to happen to the price of Bitcoin? How is Bitcoin going to behave in this environment specifically? Since if you look at Bitcoin's historical performance, as it gets closer to the halving, it tends to go up, right? So is it going to change Bitcoin's historical behavior? Do you think it will continue to be treated by the market as a risk on asset? Is the halving going to play a role in this? What's your take on that, Joe? And then we'll pass it on to Dr. Ross.
So I think that Bitcoin can hang in there and do reasonably well for the remainder of the year before unemployment begins to rapidly rise. And I don't honestly think that unemployment is on the verge of soaring higher in the next couple months. But I think Bitcoin is still going to be caught up in this environment with risk assets generally. And I think that as long as you have a relatively stable employment market, you don't have many forced sellers. And once forced sellers enter the market with respect to the equity market, I think there's a lot of funds that are just going to sell everything, right? Because they have to cover positions and they will sell Bitcoin. I don't necessarily think it needs to go down and make new lows per se. I think it can sort of trend in the same range, but I'm optimistic about next year, particularly the faster we get into a recession, because ultimately I think you need some green light from the Fed, even if they're not going to come with, and I agree with Jeff on the comment about, more stimulus and liquidity being provided to the system. Ultimately, what you want is you want them to be relatively stable. Okay, you want them to have the ability to bring down inflation to a level where they're going to just hold. Okay, and in that environment, if there is a recession, hopefully it's a moderate one. And by the time you get to the other side of it, Bitcoin kind of already bottomed. It doesn't necessarily have to make a new bottom, but it can effectively range in this, build a nice base, range for the next cycle, range until we get out of the recessionary forces that are on the horizon and head higher. Okay. I always tell folks, I don't trade Bitcoin. I don't think it's wise to trade it. I think it's makes a lot more sense to just slowly dollar cost average into a position. But I'm not so naive to think that in a recessionary environment where liquidity is being drained from the system by the billions of dollars on a weekly basis, and money's getting tighter and credit's getting more expensive and businesses are going to have to lay off employees, that Bitcoin's going to go into this raging bull market where we're going to be at $200,000 or $300,000. Now, does Bitcoin have to do terrible in advance of the halving and, go to 10K or these ridiculous things that people throw out? I don't happen to think that's necessarily the bull case or bear case or whatever case you want to make it. I just think that, Bitcoin has already struggled a lot last year. It was sort of on this rolling recession, was sort of the front end of it. It experienced a brutal 2022. And right now I view this entire year as sort of base building to take us higher into the years ahead.
Okay. And what do you think about that, Dr. Ross? Do you think Bitcoin's hit bottom?
Yeah, I do. Although, I don't like to make those kind of calls because could it go lower? Sure. If the floor drops out under risk assets and everybody is panicking, and they think the Fed is making terrible mistakes, things like that, could it go down lower? Could it break new lows? For sure. So I don't like to say that just because it hit that 15.6 or whatever it hit, that it can't go lower. Probabilistically, I don't think it gets back to those levels again, for sure. Piggybacking onto what Joe said, I think liquidity is really important, right? I often talk about Bitcoin as being the great absorber of liquidity, and you have to take both sides of that. So if we're okay with it being the great absorber of liquidity during periods of liquidity expansion, right, what we've seen in the past is that Bitcoin does just exceedingly well. You also have to take the flip side of that and be okay with it if liquidity is contracting. Lots of people are talking about liquidity now. I'm certainly not the first one, but I beller about that all the time on Twitter. And I've seen it go from basically nobody talking about it to now you see it all the time on Twitter, and even on like the main news stations, CNBC, Bloomberg, and such. They're talking about that. If we're going to be honest with ourselves, so net liquidity bottomed in the fourth quarter of 2022. That was very exciting. Bitcoin sniffed that out immediately and obviously had just a fantastic performance. But what I haven't seen anybody talk about since then, including one of the guys who's famous for talking about worldwide liquidity, cross-border capital, he goes by on Twitter. His name is Michael Howell. Brilliant man. He's fantastic. He puts out some of the best research on it. But what he hasn't shown, and I think he should show and be a little more clear on, is that worldwide liquidity basically peaked in February, and it's since been coming down pretty substantially. And we've been seeing in the US here, net liquidity peaked in mid-March and has since been coming down pretty dramatically as well. So it would be to me, it would be nonsensical to think that risk assets, and especially Bitcoin being the great absorber of liquidity, that it would perform well, at least in the near term, while liquidity is contracting. So that's something to consider when you have liquidity contracting on top of an economy that's slowing, on top of a Fed that's tightening, on top of having this the debate happening with the debt ceiling, coming to a head by June 1st. Those are many strikes going against risk assets, at least in the short term. So very much not bullish in the near term. And how low will Bitcoin go? I don't know, but I do think, probabilistically speaking, that it goes lower in the short term. And if things don't improve from kind of a macro standpoint, it could continue to go lower, kind of in the medium term as well. Now, that's my whole caveat. All of that to say, I think that the longer term bull market has started, and I do think that we're at about month 5 or 6 of the new approximately 35-month bull market. Year 1 of the bull markets generally are kind of the least impressive of the 3 years, as we know, right? Year 2 is a little better, and then year 3 generally is amazing, and that's when you see that parabolic blow off top. I still think it's based on past cycles, and also based on business cycles and liquidity cycles. All of these are kind of lining up to happen again, where I think 2023 is an okay year for Bitcoin. It's already been pretty impressive. It's far outperforming all other asset classes. I think that 2024 bodes even a little bit better, and I think 2025 should be a pretty fantastic year based on business cycles, based on liquidity. Obviously, I'm just looking into a crystal ball, totally guessing, right? I have no idea what's really going to happen in 2025. But I'm very optimistic that we're at the early stages of the next bull market.
Yeah, and go ahead, Joe.
Sorry, I was just going to add. So when you're talking about liquidity and everything, I agree with everything Jeff said there. But I want to point out just one distinction from how to look at this. Okay, all liquidity is not created equal, and that's really important. What I mean by that is, like, for example, people look at the Fed balance sheet and they say, "Oh, Fed added a ton of liquidity to its balance sheet in recent weeks because of the Silicon Valley Bank and the blow up in the banking system." Well, 3 weeks later, the Fed has taken out 50% of that liquidity through various programs, through expirations, through paybacks of loans. The spike you saw, it's almost half gone in 3 weeks. And if it stays on this current pace, okay, you're going to have it all withdrawn in addition to the QT that continues by this time next month. So the Fed's going to make a lower low next month on its balance sheet, combined with the fact that the Treasury General Account, which, as you know, is part of the Fed's balance sheet, that is being drawn down on a weekly basis because Yellen can't issue new debt into the system because of the debt ceiling, right? So all of these things, just in the United States, and we're just talking about U.S. liquidity there, from the TGA and from the banking system, which again is going to be much more guarded in terms of who is lending to right now in this environment, given recessionary forces that are in play. All this is to say that, liquidity, little, fits and spouts of liquidity don't necessarily mean you're in a liquidity cycle, right? Like I said, if you throw a ball down a hill, it's going to bounce as it goes down the hill. It doesn't go straight down. That's not how markets work, and that's not how liquidity works, okay? There's seasonality with respect to the Fed's balance sheet, and there's seasonality with respect to a lot of governments, right? A lot of governments tend to spend, issue new debt at periods during the year, so you can see these little pops in liquidity. It doesn't mean it's a sustained, the punch bowl's back and we're at the beginning of the liquidity cycle, particularly given what their policymakers are trying to do, which is stamp out inflation.
Yeah. So I want to take advantage of the 20 minutes that we have left, gentlemen. And I want to pivot the conversation to the things that have been happening the last couple of months in terms of this continuation of this pattern. And I believe it's because of the weaponization of the dollar, kind of forced other countries to try to seek an alternative. For the first time, the yuan overtook the dollar to become the most used currency in China's cross-border transactions. Also came out that Russia and China were going to transact in yuan. Also, I believe Argentina, that's very similar news. So it seems like people are choosing an alternative to the US dollar, which is very bad news for Americans if the US loses its global reserve currency status. So do you think that's just noise? Do you think that's even a possibility? Do you think that this is just these countries like pounding their chest? What's your guys' takes on that?
Take it, Joe.
Yeah. So what I would say on this issue is that I think that the answer lies really in the middle between the two extremes. You'll see some folks that sort of say, the death of the dollar is here, that this is going to fall apart and go off the rails in the next year or two. And then you see other folks say this is, just we'll dismiss this. It doesn't really matter. It's insignificant. It's minor players. It's countries that don't have the strength and hegemony of the United States. And I think the real answer is that you should, at least as what I expect that you're going to see continuing loss of what I would say market share of the dollar globally through the remainder of this decade and into the next decade. It's not going to be overnight, but it's something that is serious, and it's going to make it harder for the U.S. to finance its structural deficits. And so that's something meaningful you got to focus on, right? But this is still something where you're in the early innings again, and change happens, as we say, gradually then suddenly. And I think you could be waking up in 10 years, and this conversation will be far more serious, and it will be attracting policymakers' attention much more acutely than it is right now. Right now, you've got folks trying to do certain activities. They're trying to search for alternatives. They're not happy with some of the economic efforts of the United States and some of the features of the Eurodollar system, which is primarily what they're concerned about. However, what I will note is that you've gotten many examples, anecdotes in recent days, for example, like in India and Russia, where they were trying to structure trade deals, trying to structure the sale of oil in the ruby, right? And Russia said, no, we don't want your rubies. We want dollars. Go find dollars. And I can give you a dozen other examples similar to that, where structurally still, even if they're or they're settling other transactions in currencies other than the dollar, the actual face value of the contract, the notional value, the unit of account in Bitcoin speak and in money speak is still the dollar, right? Even if you don't have dollars themselves, when companies, entities globally are doing transactions, they're doing transactions where the face value of the contract says you owe $1 billion payable in your currency of choice. All of that activity, even if it's not specific dollar activity, it promotes the standard, the unit of account of the dollar globally, which is how many finance and transactions occur. The vast majority of finance and transactions occur globally.
Yeah, then what's your take on that, Dr. Ross?
Almost exactly the same answer as Joe. I agree with what he said, and just to add to it, I mean, and we've been talking about this for a couple of years. I think we're moving to a multipolar world, right? And this doesn't happen overnight. The calls for the dollar's demise are greatly exaggerated, right? I mean, it's going to be around for a very long time, but the trends are clear. It's clearly losing its status slowly as the world's reserve currency. And I think the world's reserve asset also is coming under question very slowly, though. This is going to take decades and decades to play out. I think a decade from now, most of the world's purchasing power is going to be in the US dollar system like it is currently, the Chinese yuan, the BRICS nation. I think that coalition continues to get larger and larger. And then Bitcoin as well. I think Bitcoin is kind of the dark horse that's going to sort of come up from behind and sort of be, interplaying throughout all this. It's hard to see how it's all going to play out. I don't think Bitcoin takes over the world, within 5 to 10 years. But it is growing quickly, and it's not even on the radar of many people, but I think it will be on everybody's radar 10 years from now for sure.
So Joe, and I completely agree with you, Dr. Ross, but it's interesting. So you say 5 to 10 years, I would say 15 to 20. I think Bitcoin's inevitable. Bitcoin's incentives stay winning. One of the breaking news that happened this week was the Kingdom of Bhutan since 2020, before El Salvador, was not only stacking Bitcoin, but using their massive hydroelectric capacity to mine Bitcoin, and they were all doing it in secret. They weren't telling anybody. And the only reason that the people found out was because of the Celsius lawsuit disclosure. And I believe that there's a lot of other countries that are doing something very, very similar. So I guess the question to you, Joe, is, the U.S. government gets a tremendous amount of power from basically weaponizing the money, right? Which is the reason as to why these countries are seeking an alternative in the first place, not to mention U.S. sanction policy, which they use. I mean, you can't even make the argument that it's very effective, but they use it tremendously, specifically against countries that the U.S. government is not in good relations with. They have a lot to lose if people start to transact in Bitcoin rather than dollars, which, kind of coincides with Operation Choke Point 2.0, right? Why the Biden administration doesn't feel so good about Bitcoin. So I guess my question to you is, obviously they're going to try to stop it, but will they be successful? And what do you think on the legal front? What do you think they can do?
They can do well. We could talk for an hour about that. I mean, they. Let me just go back for a second because I want to make one point. The dollar is really important, but what's more important than the dollar is the treasury market. One of the reasons why the global dollar system, the global Eurodollar system works is because of the treasury market, which is the underlying collateral held by commercial banks that allow people to borrow against, lend against, do financial activity all on your treasuries. With that lifeblood of the treasuries, you can literally create money. And the commercial banking system can create money with those treasuries. So just to talk about the evolution of this and how it pertains to Bitcoin. Right. What is a game changer in my mind, and I think as Bitcoiners, we tend to focus on what the government's going to do just because there's this sort of suspicion about the government in Bitcoin circles, rightfully so. But I think what's far more impactful is if you have private actors, the private commercial banking system, banks and non-banks globally, if they start to use Bitcoin as reserves, which I think is probably more likely than a lot of people expect, and allow you to borrow against, lend against, use Bitcoin as real pristine collateral, that's going to be a game changer. And it will be a game changer in how credit is available throughout the world with an underpinning asset that you have really pure knowledge of what it is, where it is, who holds it, no custodial counterparty risk if banks hold it. But putting aside, let's go back to your exact question, which I think you're saying, what would governments do? Okay. So in the United States, what I fully expect is that consistent with Operation Choke Point 2.0, and there's some great, Cooper and Cook has a great report about this. I have to plug that because it's fantastic. It's the best hour you could spend reading. It's a report by a very prestigious law firm that broke down all of the anecdotal evidence out there that shows there's been a coordinated, concerted effort by U.S. policymakers to clamp down on exchanges and exchange activity. And what I would say from a Bitcoiner standpoint, everybody should be hypersensitive to the fact that if you have any association or relationship with a US-based exchange, they are squarely in the crosshairs now. After the blowup of SBF and FTX and all that happened in 2022, right now the policymakers have said, we're not going to get any legislation passed through the Congress. So all the enforcement chiefs, the CFTC, the SEC, the DOJ, go out there and handle it. Get control of this industry. And what you've seen through a lot of evidence now is that they're trying to make it harder to transfer money to exchanges. They're trying to, there's public accounts of ACH rails being taken down. There's banking partners that are being told, we don't want you doing business with these exchanges. And I don't anticipate a direct attack on Bitcoin or people that are holding Bitcoin. I see it as sort of a Cold War where they just say, fine, you want to hold Bitcoin in your self-storage, hardware wallets? Great. Have it all you want. But if you want to convert it to cash, if you want to get it into fiat, if you want to do anything with respect to, pivoting out of the Bitcoin natives ecosystem and having to go onto an exchange, it's going to become increasingly difficult. I expect new KYC requirements. I expect new requirements with respect to withdrawals, new requirements for money coming onto the exchanges and off. All of this will accelerate into the near future. And if you're a platform that is selling anything that could remotely be considered a security, I expect enforcement actions to come against you. Obviously, I'm sure you've heard about the Wells notice that was issued to Coinbase. The clock is ticking on the Wells notice to Coinbase. The SEC is going to file suit at some point before the beginning of September, because there's a finite date at which they have to file the suit. So you're going to see a lot of this activity. And I think the idea is maybe we can scare the general public. Maybe if we do enough of this, we can scare the general public into, you don't want to mess around with this crypto stuff because it's just too dangerous for your own good. And maybe that's the best way they think they can stamp it out. Just from a reputational standpoint, attack the institutions and make the general public think it's not safe to do business with these guys because of their association with terrorism or illicit drugs or whatever.
Yeah, and then my favorite buzzword, the financial stability.
Yeah.
Yeah, it's interesting, and it's funny that you said that. I remember seeing this in a tweet that one of the new requirements from Coinbase for you to withdraw would be to list the name and the address of the individual of which you are sending that withdrawal to, which is very similar to how the fiat system works. But again, the enforcement mechanism isn't quite there once you get your money off the exchange altogether. So the best that they could do is they could really slow down the withdrawals, but once it's out, for example, once someone is fully orange pilled, what incentive do you have to go back to the traditional financial system? You don't really have that incentive. And I guess maybe I'm looking at it from a, crazy Bitcoiner lens. The idea of trusting someone else holding my money is absolutely absurd at this point, right? And I think that as time progresses and the system starts to break more and more and more, I think that question, I mean, you saw Tim Pool ask it in his very, very popular podcast. He says, First Republic is going down. He read the quote that I read you guys in the very beginning of the show, and he said, F that. I'm putting my money in Bitcoin. And I think that more and more as time progresses and just clown world continues to accelerate, I think more and more people are going to ask that question. But I do agree with you, Joe, 100%. I think that they're going to do whatever it takes to at least slow down the adoption of this thing. Dr. Ross, I'm going to pass it on to you. What's your take on all this?
Well, again, I actually agree with all of Joe's take. We got to find something to disagree about, Joe, but I would have answered it just the same. He was more eloquent. But I will say the one problem so far is I agree with you. Why would any Bitcoiner want to go back to the system? I'll say from personal experience, because we still have to use the traditional system, right? I still have bills to pay. I have a mortgage. I can't pay that stuff directly with Bitcoin yet. So the Bitcoin ecosystem is rapidly being constructed and built out. That infrastructure is being built out, but it's still nowhere near robust enough so that people can live solely on a Bitcoin standard for the most part. There are exceptions. There are places in the world where you can. Certainly cannot do it yet in America, right? I can't go to the grocery store yet and buy my groceries with Bitcoin. You can do workarounds, you can get gift cards, you can do these things, but until that system is robust and complete and totally fulfills all of those roles, we're still stuck with this kind of awkward hybrid system. And I think that's going to be with us for at least a few more years yet. I was hoping that it would be better. I remember listening to Jack Maller's talk at the Bitcoin conference in Miami last year. And I came back from that telling all my friends and family that you're going to be able to pay, buy your groceries at the grocery store with Bitcoin before 2022 is over, because that was the timeline he was saying. Right. And it didn't happen. And he came out and publicly apologized. He said, I got too excited about it. This was way harder than I thought it was going to be. I think the regulators are probably making it harder, right?
Yep.
They're gumming up the gears for sure. But that's what I would say. If you are a Bitcoin developer and you're building in this space, God bless you, like get it going, like get this parallel system up and running so that if we do, so if Operation Choke Point 2.0 is massively effective and they start shutting down all the pathways, we need to have the parallel monetary and financial system up and running, right? We need to be able to go buy our groceries and everything else with Bitcoin. And in that case, then we're kind of, I don't want to say untouchable, but man, it's a lot harder for the regulators to get their tentacles into what the Bitcoiners are doing at that point.
Yeah, 100%. And that's actually one of the things, and I had it pinned on my Twitter for the longest time, which is this idea of if enough people take self-custody, we'll win this thing, and there's absolutely nothing they could do about it. I actually have a theory about what you said, Dr. Ross, and I want to pass it on to Joe, is I think when El Salvador made Bitcoin legal tender, it completely caught them off guard. And the reason I said that is that they actually passed a resolution. It was either in the Senate or the House. Literally, the purpose of that resolution was to look into El Salvador and the fact that El Salvador made Bitcoin legal tender. And I think after that, the regulators really woke up. And I think that it really just slowed down the process. I remember it was 2021 that he made that announcement. In 2022, everyone was anticipating another country, but it's almost as if, it kind of got slowed down and someone put on the brakes. Right. So, yeah, I agree. I think there's massive amount of pushback in the background, and I want to get your guys' takes on this. And it's something that I was very, very heated about. I was very passionate about it. It was over the weekend, where the IMF and one of their conditions to bail out Argentina was that the Argentinian government must de-incentivize the adoption of Bitcoin and shitcoins in the country. Fast forward, after that announcement was made, fast forward a year, Argentinians are currently suffering through 104% inflation. Around the same time, this was when the IMF sent their message to El Salvador saying, El Salvador, by making Bitcoin legal tender, it would destroy the financial stability of El Salvador. It was going to be terrible. Fast forward a year, El Salvador is currently experiencing peace and prosperity, the likes of which have never been seen before. So I guess my question to you guys is, what is truly the purpose of the IMF? Because I think what we've been told the purpose of the IMF isn't really what the IMF is for. And I know Alex Gladstein has done an incredible job looking into this matter, and he just released a new book. But I'm just very curious to hear what you guys think. Joe, why don't you go first?
So there have been well-documented criticisms of the IMF for many years, and I think their policies are a perfect example of when a government's involved, there can be all sorts of unintended consequences. I will tell you that I don't necessarily think that the folks that set out and build these organizations are necessarily evil per se. I just think it's misguided. And I think that some of the times they put forward plans they think, will be in the best interest of that country, right? This is going to be good for you, right? You take this medicine and you'll feel better, when in reality it actually hurts and paralyzes the country. That's my comment on that. I don't want to get too much more into that. I got to be careful with some of the compliance folks that may watch this at my firm. So let me just say that.
Fair enough. Dr. Ross, what's your take?
Again, I agree. I think it wasn't intended to be harmful. I think it was intended to help, but the law of unintended consequences suggests that as the system progressed, maybe there were some unintended consequences that have been fairly destructive. I like the work that Alex Gladstein does on this. I think it's very provocative, thought-provoking. If you believe that debt is a form of slavery and they're basically exporting debt to countries, you can make arguments that it's helping a nation, and you can make efforts that it's hurting a nation to offer that, extend the credit to them. And so, like Joe, I got to be careful what I say too. But I'm, there's good and there's bad, and the bigger it gets and the longer it goes on, it tends to lean more towards it gets kind of worse and worse as these systems grow larger. So.
Yeah.
If I could just go back for 1 second to something you said,
Absolutely.
which I think is really key. So at its core, I think that the idea of Bitcoin is fundamentally American, right? I think it aligns with the spirit and promise of America. And if you're going to have all these, this clamp down and choke point 2.0 and make it more difficult to people, in some ways that can be a positive in the long run. And let me explain why. The more aggressive that central planners and policymakers are, and unjustifiably so, it sets up what I call test cases. And I'm involved in some of those now. You won't hear about them because I can't really talk about clients. They wouldn't appreciate me, mentioning them by name. But there are millions of Americans who hold Bitcoin, who they have personal philosophies that align with what Bitcoin is trying to do. And there are judges, right? There are lawyers. There's a whole group of people in the legal industry. You'd be surprised who actually they understand the spirit and the core of what Bitcoin is trying to accomplish. And if the policymakers do what I think are unconstitutional and unlawful restrictions on people's ability to save their value, to save their hard-earned dollars in something much stronger form of money, that will trigger people to go forward and fight these things in courtrooms across the land. One of my biggest frustrations with representing Bitcoiners is that sometimes I have a great case, I would say this is a wonderful test case. If we were to pursue litigation on this, it wouldn't cost a ton of money and it would set a precedent for people moving forward. And that's how you develop law that can be really strong and protect the individual sovereignty and liberty of people out there. So I think I sense a change because early Bitcoiners that I've represented work with, they're very reluctant and suspicious of the justice system and the legal system, rather, in general. They don't want to get involved. The newer breeds in the last few years, sophisticated, high net worth individuals, they say this is BS. These rules they're imposing, these exchanges, and how they're totally screwing us on many levels. We're going to get involved. We're going to fight this because we're right. And the law is on our side. And once you do that, and once enough people do that, you set up those test cases and those precedents moving forward. So I say for choke point 2.0, bring it on. We'll fight them in the courtrooms, and we will eventually win. That's just maybe I'm overly naive and optimistic, but I believe it.
There we go. Yes. Okay. All right, Joe. I really appreciate you saying it that way. And yeah, I completely agree. Corey has the theory, the race to avoid the war. We want a transient majority of 10 million Bitcoiners in the United States, so that if there's any, potential anti-Bitcoin regulation, coming up, it just becomes impossible to pass. Just like the gun lobby, right? Try passing a gun law in the U.S. It's literally like almost impossible.
Exactly.
Right. So yeah, Joe, and that was a very inspirational answer, and I'm very, very glad that you gave us your outlook on that side, because not that many people have, you know, that perspective on things, especially because of where you work in your field. So to end, guys, just to kind of wrap it up and to at least provide value to our listeners, in the end of the wrapping up of this conversation. What do you let's start off with you, Dr. Ross. What are you looking at nowadays? What is the most interesting thing, and what piece of advice, not financial advice, just piece of advice, friendly advice, would you give to anybody heading into the next 6 to 12 months?
Whew, that's a good question. Well, I think anybody who's been paying attention at all realizes that something is up, right? When you see banks collapse, that's not normal. When you see, people talking about recession and people starting to panic a little bit, none of this is normal. This is kind of the downside of these asset bubbles that get inflated. Now we're seeing them get deflated and, downright pop. That can make life difficult for people. And so I would just challenge people to, really think hard about how you can protect yourself and your family and your purchasing power in the near term, in the coming year. If we have a tumultuous coming year, if the economy gets really rough, if people start losing their jobs, man, do everything you can to keep your job, keep your head down. I would strongly recommend considering to figure out what makes Bitcoin, and I would even throw gold in there if you want to, especially for older folks. What makes those different? Why do we call those hard money? What's different about Bitcoin compared to government fiat? And if fiat is basically programmed to take your purchasing power methodically year over year, what are some ways that you can actually preserve your purchasing power? It's different for everybody. I come from the finance industry, so I grew up talking about stocks and bonds and thinking about things like that and real estate and whatnot. But there is a kind of money that literally was designed to not only protect but appreciate your purchasing power over time. And so I would consider looking into that and taking the time to learn a little bit more about Bitcoin, especially over the coming 6 to 12 months.
And thank you, Dr. Ross. And same question to you, Joe. Is there any indicators or anything that is on your radar that you're looking at? Is it the unemployment rate? What are you looking at? And what piece of advice would you give, to friendly advice, not financial advice, to anybody watching the show heading into the next 6 to 12 months?
Well, thanks again for having me on. What I'll say is this. Let me give you two things just to look at in terms of the broader crypto landscape. So I still think you're going to see a series of new enforcement actions filed. We've only seen the tip of the iceberg over the next, say, 90 to 120 days, most notably the Coinbase filing. When you get that filing, okay, and when it comes out, scroll to the end, and there's something called the prayer for relief. And before you read the bad news articles about, legal journalism and whatnot, read the prayer for relief in that complaint that's filed by the SEC. See how broad it is. See if it seeks an order asking Coinbase to suspend their exchange or suspend the trade of certain assets. That's going to be huge. I mean, that could be an existential threat for Coinbase and every other public exchange in the United States. So that's really key. It's probably the biggest story in quote unquote crypto as we move forward. But for the economy, okay, which is I think what you're trying to get mostly at with your question. The two things that I'm looking at, again, continue to be the credit markets. I still have seen, the spreads hold up reasonably well. I expect those to blow out at some point this summer as we get closer to a recession. I think unemployment will be the last thing that really gets to accelerate. First, there's a sequence of all this. First is the credit deterioration. And once the credit deteriorates, then companies which are starved of that credit, then they have to start letting go of workers. And I think because of shortages in the labor market and the fear of not having workers, they're going to prolong people on the payrolls for much longer than they probably should. They're going to err on the side of keeping people unemployed probably until the later part of this year. But those credit spreads are key. Any metric you want to look at, it'll all tell you the same story. Look at those private credit spreads, particularly at the high yield end. And then the other thing, which I think is far more leading and important to look at, is look at some of the commodity prices. Look at the action in copper and oil. And if you noted today, what everybody's talking about the banks and the regional bank blow up. To me, what was far more interesting is what's going on with the XLE, which is the energy sector ETF, and also the price of oil. Right, you will recall a few weeks back, I think it was, the Saudis announced those production cuts, and they were trying to shore up the oil market to say, listen, we need to make sure we maintain price stability. It popped and then went straight down. Right, it's been a free fall selling mode, which oil is so important. It's the lifeblood of our economy, and it's not bullish that oil is selling off like that, right? If we were entering a new growth cycle, if China reopening was going to propel us to a long-term economic growth period for the next 2 years, you would not see oil performing like it is right now. So if you want to pull those things up, high yield spreads, oil, copper, they'll tell you the signal in far before the stock market or the S&P 500, which isn't particularly meaningful on economic growth.
Interesting. Well, Joe, Dr. Ross, it's truly been a privilege to have you guys together on this Simply Bitcoin IRL. Thank you guys so much for coming on the show. Dr. Ross, why don't you tell everybody where they could find you on the interwebs, and then we'll move on to Joe.
Sure. So I'm on Twitter all the time. You can find me. My handle is @VailshireCap. Or you can also, I run a hedge fund and investment advisory. That's at vailshire.com. If you're interested, you can actually shoot me an email directly if you're interested to know more about that. info@vailshire.com. And I just got to say, Nico, thanks so much for having me again and having me on with Joe. I love doing these kind of things with Joe. He's brilliant and really fun to talk to. So thanks for having me on.
Always, Dr. Ross, and hope to have you on again in the future as well. So what about you, Joe? Where can people find you on the interwebs?
Yeah, my Twitter is @Joe Carlasare. Probably the easier way, if you Google me, you'll see my firm. It'll pop up. Amundsen Davis. I'm a partner there, and I didn't mention that I need to. That I specialize in litigated disputes involving commercial transactions, commercial entities, anything with respect to breaches of fiduciary duty, contract disputes. So if you have a litigated dispute and you're a Bitcoiner, please reach out. I'd love to help you and fight pretty hard for you in the courtroom.
Awesome. Well, gentlemen, thank you again for joining me on Simply Bitcoin IRL. If you don't mind hanging out backstage for a second while I wrap it up. Guys, thank you so much for tuning in. Shout out to the Bitcoin companies that make the show possible. Swan, best place to build your Bitcoin stack. And of course, the biggest Bitcoin conference on the face of the earth, Bitcoin 2023. We'll see you tomorrow for the live show, 12:15 p.m. Eastern Standard Time. See you guys tomorrow.